Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the euro currency. So you can see in the recent few sessions market stands in a really tight range just because lots of different events have happened, and actually market needs time to understand what's going on and in what direction it will move. So investors right now are thinking about these big political events. This week, as you know, there's some blackout silence for the Fed. Usually it happens before the meeting. On the technical side, you could see that mostly everything stands the same. So we have accurate engulfing pattern, and we said that yes, overall context remains bullish. We have great ABCD pattern. Here is acceleration, which is great for a bullish context, but at this point tactical retracement is possible. And usually when the market forms engulfing, it takes the shape of the ABCD pattern on lower time frame. So it means that somewhere to the 30% support around 108.20 area retracement could happen. Approximately the same chart we have on the dollar index. So if you take a look at the dollar index, you could see here the same great engulfing. Here, as I already explained last week, that this engulfing has been formed right at the 618 support, as OP stands slightly below the 618 level. And when this happens, minor penetration of the FIB support doesn't mean that this level has been broken. So mostly market stands on agreement support, suggesting the same bounce. On a dollar index, you could see the same picture, great downside action. In fact, here we also could consider a kind of the bread and butter trade that we talked about on the euro currency. Market just has need to reach predefined resistance level on the dollar index and support on the euro currency. So that probably will be, by the way, the target of this engulfing pattern. So both patterns combine each other. So on the dollar index, the same CD acceleration means that chance on downside continuation after pullback will happen also stand not bad. In favor of retracement, you also see signs on the 10-year bonds. Here is minor hand shortages forming somewhere in the fall time frame chart, and it also suggests some minor bounce on the yields, which all should support the dollar as well. From that standpoint, I do not see yet any signs that market could start upward action immediately. So probably everything goes as it's suggested by the technical picture. On 4-hour time frame chart, you could see that's actually here's market mostly has been broken this lower border of this consolidation, so it has moved slightly below the lower border that we had here previously, and divergence stands here that has not been completed yet. And take a look, that sideways action has the bearish feature, because on a 4-hour time frame chart it looks like the bearish dynamic pressure. We have bullish MACD, but price action stands flat, and it's just possible downside action. So you can see 108.16, 108.40 is precisely confidence area around the 30% support that we discussed. So that probably will become the major destination points and the nearest term that market could try to reach. On the hourly chart, there are 2 points also to mention. First of all, this is our hand shoulders that we already talked about. So it's still valid, and this is still major pattern to watch for. So we definitely will be watching for its A, B, C top, D pattern. Once the C top and the top of the right arm will be formed, maybe it's already formed right there. We will see. Currently, we do not see yet acceleration. So if you plan to take the short position with this pattern, you probably need to try to take the position as close to the 109.20 area as possible. So maybe to use 50% support. And the second moment is to mention, it's also important, recall what we said in the weekend. Here the double repo pattern might be formed, and indeed it has been formed and started working really nice. So we have really great acceleration. Our regardless triple to buy has worked, But take a look, suddenly at the 30% level, market turns down again, and double repo has not worked properly. By the double repo pattern, market has to reach high standing level. Obviously, this is the Joe Biden race out has worked, and that has was probably some temporal demand for United States dollar that has reversed this tendency. But anyway, it's technically this sign of weakness. So it means that, well, this sideways consolidation when the market can't form high standing top of the right arm, reaching at least the 50% level. I'm not telling about the 618. This is bearish sign. So you can see we have combination of some minor bearish signs that suggest that the retracement should be deeper. Correspondingly, those of you who would like to take the long position on the daily high time frames probably need to wait and see what will happen around nearest FIB support area that we mentioned, around this one rate 15, 1 rate 39, right here. Those who would like to take the short position, theoretically you could gradually start accumulating the position, splitting it in part, for example, and taking position on some pullbacks that might happen. For purists, you could try to catch precisely the level around 109 if somehow market still will show this A, B, C pattern up. Here I do not know, maybe minor hand shorts will be formed and market will be able to show a deeper retracement before downside action starts, but I'm not sure. Based on this action, it's difficult to say definitely. It might happen that this might become actually the top of the right arm, and the hand shorts will be skewed a bit to the right, and this will be ABCD pattern based on this most recent swing. That's why it's better to, if you would like to participate in the bearish action, it's better to split your position and entering in parts. So this will be easier, and definitely will have some position if market will start up or down or downside action. So that ends towards what we have on euro currency. So let's keep watching.